Good morning, Richard Calhoun, real estate broker with Creekside Realty, 40 years of working with buyers and sellers here in Silicon Valley. We're here to talk about week number 16, jumping into the first data slide. The big takeaways here, as you can see, last week we had a huge drop in inventory. That's not inventory, but number of new listings coming on the marketplace. That was directly tied to Easter. And you can see this week we recovered a little bit, not as much as I was actually expecting us to recover. So there were fewer sellers coming on the market this week than expected. The expected level is the yellow line, that's the 5-year median, but it's at 90%. And because of the lack of inventory, new inventory coming on the market last week, there was a corresponding drop in the number of new offers associated with acceptance this week. The blue line down here is the inventory, and you can see inventory increased a little bit on a percentage basis, still at 80%, so there's still a shortage. If you move on to days of unsold inventory, this is the biggest key indicator of the future of the real estate marketplace. Anything below 40 days is what I consider to be a strong seller's marketplace. You can see we were down here somewhere around 17, 18 days of unsold inventory. We jumped up to 21. That doesn't concern me. Again, you've had more listings come out on the market this week. The offers will get accepted next week, and I would expect that to drop down. You're getting impacted by the few number of offers accepted last week because of the fewer number of new listings coming on the marketplace. So this is fairly typical. You can see this spike in all the other holidays. Just real quickly, this is probably Thanksgiving. This is probably Labor Day. This is probably Memorial Day, and this is Easter bump right here. So I'd expect this to come back down and just be another little peak like those other holidays. This is a little bit more interesting. This is looking at the sale price to list price ratio. The most recent line is the purple line. You can see now we've fallen back a little bit from the peak, but there was a little bit of a lull because remember, this data now is lagging. This requires sale price. So the lag is about 4 or 5 weeks for the most part. If there was a lag in more like I would actually probably say March, mid-March, well, maybe beginning of March, I could look in this and report a little more accurately next week. But there was a little bit of a lull in the market that seems to have gone away. But now when you're looking at sale price, you're looking back in the rearview mirror. So 5 weeks ago is when the lull hit. So actually that's what we could do. We could take today's date, the 23rd, go back 35 days, and you're somewhere right around the 20th of February, if I'm doing my math right, 31 days in March. Oh no, somewhere around the 20th of March is when we were sort of in the lull. The lull didn't last that long. I would say 2 or 3 weeks. I would expect this purple line to be down in this vicinity for the next 2 weeks, and then I would expect it to start going back up. Only time will tell. Same data set here, only 12 weeks, so less clutter. Concept's the same. The purple line is the current week. The solid lines are the most recent weeks. The dashed lines are the most recent, second most recent, and the dotted are the oldest. So you can see that when you went from the oldest down here and 2 lines up here, and then the dashed lines, and then most of the solid lines, you were basically improving, not you improved from these two, which is February 12th and February 5th. And if you think back about that, if you go back 5 weeks from those time frames, you're talking about a few transactions that would have been generated in 2021, negotiated in 2021. And that's why the pressure just wasn't there. The holidays lighten up the pressure typically on the buyers. This is the key breakdown of the different areas. So what you're looking at now is active inventory. What percent of normal are you? In Santa Clara County single family homes, you're at 57% of what you would expect. The expectation is based on the 5 years before the pandemic, so 2015 through 2019, which are 5 good years. Santa Clara County single family homes has roughly half the inventory you'd expect it to have. San Mateo County is approaching 90%, 87% of the inventory you'd expect it to have. Jumping down to condos, Silicon Valley, Santa Clara County has 102%. So that's sort of right where you'd expect it to be. Bay Cities has 210. I've already explained that Redwood City had a lot of new condos and townhouses built since about 2010. And so when those start hitting the resale market in 2015, there wasn't that many, but by the time you start getting to 18, 19, 20, 21, there's a lot more of them coming on the marketplace. So there's more inventory, so you'd expect the inventory to be higher. So that's why you have cool inventory indicators, but yet your DUI is the hottest out of all the 4 major micro market areas that I am reporting on this particular slide. So this says it's got the most inventory, so you'd expect it to have the slowest DUI, but yet the DUI is the lowest, which would tend to indicate the developers were smart and built what was needed for the consumers. And now that it's there, there's just more activity. So when you compare it to numbers that were generated based on it not all being there, you show this high percentage of expected inventory. DUI, you have a little bit of a lag because you have offers, but that's just offers accepted. You don't need to know the sale price. You just need to know the rate of which offers are accepted. So Santa Clara County, you can see, is at 20.5 days. Very strong market, but clearly different than last week at 16. Again, I maintain that's because this past week, there wasn't any sales because the week before there wasn't any new inventory. This week, we've had new inventory come on the market. So you have inventory with no sales, and that reports a higher DUI. So I'd expect this to drop. Again, I showed you the peak that every holiday has. San Mateo County single family homes is very similar, 22.5 days, up from 14 days. And I'm just going to point out that I did go back and look in, found my correction. I was concerned about my reporting of San Mateo County single family homes and Bay County condos. And it turned out I was reversing those two. So that's why they were tracking and looking pretty reasonable until all of a sudden they didn't look reasonable. And I went back and found my error in column PF, rows 74 and 77. So they're corrected now going forward. I've corrected the data on my database going back in time because that was fairly easy to do. But obviously what's out there on the internet on past presentations is going to have those two flips. So if you're looking at historical stuff before last week, flip San Mateo County and Bay condos DUI and you'll get a more accurate number. Now you move on to closings. For closings, you have to wait for the sale price. So there's a 5-week delay. You can see Santa Clara County, 91% of the sellers are getting more than their asking price. Santa Mateo County at 89%, condos in Santa Clara County 90%, and Bay condos at 79%. So very strong marketplace. Sellers have to be happy with that unless they're really gaming the system and putting their house way low, expecting overbids, and then they don't come in as high as they want, in part because some buyers, start getting resistance. I'm not going to pay the seller 50% more than he was asking. You have to be reasonable. Magnitude of overbidding. This is how much the buyers are overbidding. 117% down from 117.5% for Santa Clara County, 116% basically flat from last week in San Mateo County. Condos in Santa Clara County flat, and Bay condos and townhouses flat. So really the only change at all was Santa Clara County, and there was a slight decrease in the frequency of overbidding. Lastly, going on to appreciation. This is a little awkward, but I still think it's the best way to report it. I'm using my base as the entire 2020 calendar year, and I'm comparing it to just closings in the last week. So you're comparing 1 week to a year, but that gives you a rock solid appreciation. And you can start seeing that in 2021 over 2020, there was a 25% increase. Now with 2 years in there, for Santa Clara County, there's been a 42% increase. San Mateo County really has been flat, according to this data, 24.6 after 1 year and only 27.2 after 2 years. Condos are doing fairly well, not as great, but in Santa Clara County, you went from 19% to 27%. In San Mateo County, you went from 16% down to 9%. You actually lost money. This is not property value on any particular condo. This is what the median did. So it depends a lot on what the mix is. This is a chart that I did not update for this week, but I think I'm going to try to make it a little bit more readable and go forward. And this is on the article that I reported on the Mercury, reporting that the number of transactions were way down in February because of the increased interest rates and because of the world uncertainty. The problem with that in a nutshell is they report closed escrows, which were actually negotiated in January before we had the rise in interest rates and before we had the invasion of Ukraine. And if you go back and if you look at the buyers in February, we had the second most active year, and the only year it was less than was last year, 2021, which was a record year by far. In 2022, in February, when the Mercury News is reporting a decrease in buyer activity, and this data here is actually buyer activity instead of closed activity, it was very strong. Here you can start seeing the lull in March 12th, and I actually don't know why. It was the fifth lowest number of offers accepted. And that might be the world uncertainty coming in. The third, but now back on April the 2nd, we're back. We're actually beating last year. I think it's temporary. I'll try to update this slide for going forward because I think it's interesting. This slide I played around with a little bit. I'm bringing in two additional counties, Contra Costa County and Alameda County. I have some single-family homes and condos and townhouses combined here. I have broken out here. I think I'm going to shrink them down and put in condos over there. This data that's crossed out is not updated from last week. And this is it's a bogus number that I'm not in control over, but it gives us some idea of the overbidding. And it was interesting, at least for me, to see the overbidding in Alameda County, and specifically in Alameda County single family homes, is the strongest out of the Bay Area. Haven't tracked Alameda County in detail historically, so I really can't comment on it. My perception is San Mateo County is usually the leading, and prior to COVID. Subsequent to COVID, I would have assumed that San and Clara County took over, but sure looks like Alameda took over. And I think it's driven by where a lot of the buyers are moving to. They get more house for their money. With the pandemic and remote working, they don't have to go to work as often. So I think the desirability of the areas that are further away from the work center have increased. And with that, it's time for a recap. These are my root URLs to get to the presentations live Saturday morning. You do Silicon Valley real estate market graphs, just the 6 letters, 2022 at 9 a.m. I start right at time as long as I'm ready, and I usually am. I post a handout. You add the letter H, 2022 04 23 for today's date. To get the PowerPoint presentation, I try to get that up at 8:45. They were up at 8:45. You can look at the archives of these by going to the root URL and a specific episode by putting in the year date, month date code. And no one will know about this, but if you want to come and look at today's episode, it will be late. It may not even be until Sunday, and that's just because of my other workload. With that, is there any questions? Not seeing any questions, I'll move on. This is looking at the different micro market areas in the different counties. You got single family homes on the top, followed by condos and townhouses. You're looking at the 3 key indicators. And then I throw in sale price because that's what most people are really interested in. DUI, days of unsold inventory. You can see the different areas. The slowest areas at 43 days in San Mateo County, expensive areas. The bulk of these are in the high teens, low 20s. Very strong marketplace. Again, anything under 40 is what I consider to be a strong seller's marketplace. Condos on fire, all in the high teens for the most part. The one exception is North San Mateo County at 30, which is the slowest. Moving on to frequency of overbidding, Santa Clara County and San Mateo County. Oh, we got 100% in Redwood Shores again. Redwood City was 100% about a month ago for a couple of weeks. Redwood Shores is a fairly small marketplace. You can't get more than 100%. So the fact that these are all in the high 90s or high 80s, low 90s, and a couple at one at 100% and 96, 94, that's a very strong marketplace. Condos are not quite as strong. I don't see any over 90, 94 and a half, 94.7 for the moderate low areas in Santa Clara County, but most of them are in the high 80s. The magnitude of overbidding fluctuates a little bit more. The highest I'm seeing right now is Cupertino Sunnyvale, 122%, which is right up there with Alameda County. The lowest I'm seeing is the expensive areas in San Mateo County at 105%. Condos are a little bit more restrained at 111%, but only going down to 107%. So they're a little bit more clustered, but not as aggressively going up. On price, the median that most people follow is the middle number. The lowest 10 percentile in the area is to the left, and the highest 10 percentile or 90 percentile is to the right. Countywide data is reported in thousands. Individual micro micro market areas is reported in millions. Do that simply to make it more apparent that you're looking at something different. So you can see in Santa Clara County, 80% of the homes would sell between 1.2 million and $4 million. And then you can see the areas. It's getting to be very difficult to find a single family home in Santa Clara County, even in the least expensive areas, for under $1 million. You know, you're 910,000, but that's only 10% of that particular micro market area. The median is actually $1.25 million. So it's soon to be extinct, the 6-digit purchase price on a single family home. Going down, condos and townhouses. Condos, I set the highest area for white, and then you go shades of blue as the price decreases. Here you're looking at the number of new listings coming on the marketplace. So you can see the huge decrease last week because of Easter. You can see an increase this week. It's not as high as I would have expected. It's not back up to normal. Normal's up here where the yellow line is. For the first time in a long time, we've had a significant deficit of number of new listings. I don't know if that will continue. If it does, it will reheat the marketplace because the buyers still are out there from every indication I have. Here is the number of new offers. Number of new offers you can see dropped down last week, and this past week, and that's because last week there wasn't new inventory for the buyers to buy. Buyers are out there looking every day. So now I had to expect that to turn around and go up. Just like on the number of new listings, we were seeing a peak. Here on offers, you see a valley for every holiday. So this is the Easter Valley. This is going to be the Memorial Day Valley, July the 4th Valley, Labor Day Valley, Thanksgiving Valley, and the New Year's Valley. So you can see it's very repetitive. Every holiday tends to negatively impact real estate, except for Mother's Day and Valentine's Day, which has a slight positive impact. This is the total available inventory. So you can still see there's a huge shortage. You can see that we lost a little bit last week and we regained it this week. So we're just about where you'd expect it to be. The median sort of rolls over. You'd expect the total inventory to be up here, some number probably around 1,650. And in reality, you're somewhere number down here around 1,300. So a shortage of about 350 listings. Not as severe as it was earlier this year when I was talking about a shortage of about 500 listings. This is DUI for the 3 major components. You can see it's been pretty flat. You can see that it's rising up right now. But again, that to me is just the holiday. You can see the holiday for New Year's. So I would expect this to go up and then start rolling back down. Only time will tell. This is my heat map showing you geographically where the hottest areas are based on DUI for single family homes only. The redder the color, the faster the marketplace. The white color is basically somewhere between 42 and 77 days on sold inventory, just somewhat arbitrary, but I try to make it logical. 7 days is saturated red. So right now there is no saturated red anywhere on this map, and 110 is saturated blue, and there's no blue whatsoever. This is looking at the frequency of overbidding, fairly strong. You can see we're still up here somewhere around 90% of the sellers are getting more than their asking price. To the right of the vertical line is 2021. So most of last year we were somewhere around 80%. Most of this year we've been somewhere around 90%. This is the frequency of overbidding with the 3 components. And you can see that, there looks like there's a little bit of a rollover, but basically, you heat up at the beginning part of the year and then you get into May, June, July, and it basically flattens off. I would expect this to sort of plateau. You can't go higher than 90%. I mean, that's pretty amazing. I would be a fool to protect a higher number, and I would not do that. And I would try not to predict anything. I try to report on what's actually happened. Here's your frequency of overbidding geographically on the map. You can see 94.2% in Cupertino, Campbell, Cambrian, Santa Clara, Willow Glen at 93. Milpitas at 92, followed by Saratoga, Las Gatos at 90, and essentially South County at 90, East San Jose, Central San Jose, South San Jose at 88%, 86% for Los Altos, Palo Alto. By far the lowest is Atherton, Menlo Park, Tortola Valley at 54%. Once it hits 50, it loses its color. So you can see there's a slight bit of pink shade here. Obviously at 100%, you're saturated red, anything over 95. So Redwood City saturated red, Foster City saturated red, Cupertino Sunnyvale is going to be very close, but not quite saturated red. This is looking at the magnitude of overbidding over time. You can see there was a fairly significant drop last week. That, again, in my opinion, is reflecting back to March when there was that little bit of low for a couple of weeks. This is looking at the magnitude of overbidding countywide. You can see it's very strong. It's record high levels. What can you say? Anyone that thinks the market's weak, I just don't understand it. There has been a slowdown in the fact that, the number of offers that people are getting has decreased. Instead of getting 10 offers, people are getting 3 offers, and that number is not available. I think that would be a real important number to have, but it's simply not gathered by anybody for me to go get and process. This is the magnitude of overbidding. Again, you can see Cupertino Sunnyvale right up there with Alameda County at 122%. Milpitas at 120%. Up and down, you can see the lowest areas at 105%, but that's, so the outlier area. I'm not seeing another one below 110%. Basically, your range of overbidding is from 110 to 122%, which is just unbelievable. This is your median sale price over time for the 3 major components. You can see San Mateo County bounces around a little bit more than your Santa Clara County, but condos tends to be more stable. You don't have these sort of ups and downs in condos. You had a little dip down here, but that's, New Year's, but you just tend to be more slow and steady. Here's your sold price geographically for those that like maps. I changed my policy on this a little bit, and I'm now highlighting not only record breaking, but record ties. And I'm doing that because if you show the records back here, it doesn't indicate that the market's still hot. So I think this is a better representation. If it's close but doesn't hit, it doesn't match. For example, 34.6 versus 35.6. So that was the record. But again, you can see that some of the areas now are coming back off their peaks. But, it's also when you have Santa Clara County, the entire county hitting their all-time peak, that's pretty significant. It's not up dramatically, but 42% from the previous peak that I'm seeing was 40%. So 2% increase in the last week. And you can see where that increase is happening. Here's a tie. South County, you're at 45.9. You were at 45.9 back in April 2nd. So 3 weeks ago. If I highlighted it here, it's an accurate representation because that is the record. And often you only indicate both. You only indicate the first time a record's broken. But if you're indicating that it's at the record, I feel that's more accurate. So anyway, going forward, I'm going to report the most current record if it's equal to or greater, if that makes sense. This is looking at not apples and apples because I'm trying to report April data, and I won't have April data until May 6th. So what I do is instead of going from April 1st to May through May 5th, I go from April 22nd back 35 days. There you're looking at average days on market 33, very strong, basically equal to 2018, 7 versus 9, so a little bit better. 2020 is crossed out. That is because the MLS stopped counting days. Your median days on the market is 0. That meant half the homes were selling before they were listed. That was because to encourage sellers to move forward and list their properties, the MLS came out with a freeze on counting days on the marketplace. So that's why that appears to be a record low. It's artificial. It's manipulation of the data. I'm not saying that it wasn't bad manipulation of the data, but that's why when you report the actual number, it doesn't necessarily make any sense. Inventory at 653. Right now, still a record low. Will it be a record low on May the 5th? It's hard to tell. I think it's going to be because I think this inventory will probably drop down a little bit next week. And then I only have 1 week to recover. It's going to be close, too close to call, but I'm going to call it a tie, but we'll find out. DUI at 20.5. It is less aggressive than last year for one of the first times. This year's been more aggressive than last year. So you're at 20.5, but again, that's Easter does not fall on the same day year after year. So I think that has more to do with Easter than anything else. It is going to be interesting to see what that number looks like next week. Moving on to offers accepted, you're looking at 1,114 offers, 31.8 per day. Not a record high yet, but again, we're negatively impacted by Easter this year, and some of the years you wouldn't be. I'd have to look at what the range of Easter is. I know it goes into April. I don't think it gets into May. So it goes from March to April. And I don't think it was particularly late this year. I think it's sort of in the middle of the pack, but every year is different. But anyway, at 31.8, you can see that we're not where we were last year. We're way above where we were in the pandemic year announcement because of shelter in place. But even historically, you were somewhere around 35. We're right there. If this increases like I expect it might, we're going to be sort of typical. We're not going to be as great as last year, but last year was a record until you go all the way back to 2012. And that's something it's important to realize is even though the Bay Area is getting more and more crowded and there's more and more houses that exist, the transactions, the turnover rate is getting smaller and smaller and smaller. So we're having fewer transactions all the time, despite more properties available, more inventory overall. Obviously, this is not 116,720.3. It's supposed to be 116.7%. And that's just a little processing error that I happen every once in a while. So this is a record high at this time of the year. I would expect that to maintain. The 91%, the frequency of overbidding is a record high. I'd expect that to maintain. The median sell price is getting very close to $2 million. And this table, just because I didn't say it early, is single family Santa Clara County only. And then the typical square footage table is exactly the same, but this is comparing apples and apples. But in order to do that, I'm reporting on March data. This is what the media was actually reporting on February data. So, I'm 2 months ahead of the media, which is pretty insane when you think about it. But with that, we back to the URLs because I've finished the week presentation. If there's any questions, speak up. If I don't see any questions, I'll end the meeting. Not seeing any questions. Have a nice week, everybody. Take care. Bye for now.